Welcome back. As promised, let's get that conversation going with the management of Monte Carlo. Now, that stock's been under pressure. The company came out with the numbers that, well, at least on the top line, it looked quite okay. The revenue growth was, around 23% year on year for the first quarter. There was, however, a sharp contraction in gross margins, which led to an EBITDA loss. Executive Director of Monte Carlo Fashion, Sandeep Jain, is with us now to talk about the performance and the outlook ahead. Sandeep, thank you very much for joining in. So let's start with this. I mean, we're looking at a revenue growth of about 23%, which is fine. But I think the market's really focused on this EBITDA loss. I mean, there's a 4 crore loss versus an EBITDA of about 4 crores last year. What happened?
Good morning, Reema. This is, I think, one of quarter, and there are no negative surprises in this. Basically, the loss is because of two reasons. One is that because of last winter was bad, so there were more returns. So because of more returns, there is a loss of 10 crore because when we sell it on wholesale price, and when we book the inventory, we book it at a cost. So there is a gap of 10 crore in that. And second reason is 9 crore of additional discount, which has been given in the summers because of early discounts, which started in May, which normally starts in June end. So these two events basically are actually making us more positive going into the next quarter because both these issues have been taken care of in this quarter. And going forward, we strongly believe that we will be coming back very strongly in second and third quarter.
No, Sandeep, let me just take you up on that. So what you're saying is that there are two reasons why you had an EBITDA loss. One is because of this inventory issue, I mean, the inventory correction that happened. But the second issue is a little more concerning as I see it. These early discounts, and it's actually not just you. I think people across the apparel and retail segment have seen a lot of discounting earlier than the usual end of season sales. Isn't that a concern? Doesn't that tell you that demand is waning, at least at the kind of price points where a lot of apparel makers, including maybe Monte Carlo, were at in the first quarter?
See, I would put it that way. Definitely, yes. When every brand is coming on USS, you just can't be a brand which is to be, left behind, not to go for a sale and to build up the inventory. So the worst thing is that, yes, definitely brands are actually coming forward to go for early discount. But the good thing in our brand is that now we are sitting at the lowest inventory in summers. So we are having a now trade show which is coming up next month. We are very confident of, as inventory is very low in our retail stores as well as our warehouse, and we look forward to a very strong booking in the coming summer season as well. So for us, I think going forward will be more positive as I sounded in first quarter. So that's only I can say that we'll be able to maintain our EBITDA margin also, which was given in the beginning of the year, 20 to 22%.
Okay, so for the full year, EBITDA margins will be sustained at 20 to 22%. Just to understand that this discounting which took place, what was the overall, hit was 9 crore, but in terms of percentage, how much higher were the discounts over a longer period of time in the current quarter versus same time last year? And do you think you may have to give discounts even in the current quarter? Have the discounts continued?
Yeah, so broadly, if I say, including all the channels, it's approximately a hit of around 10% as compared to last financial year. But going forward in this quarter, as most of the discounts have been taken care of, so this quarter discount should be less as compared to last quarter. And also the fresh sales have started for winter wear also. So we are only going forward into this quarter with a very positive mind. And also the economy has rebounded as compared to the first quarter. We have seen that the spending is also happening. And as far as if I talk about our own EBO stores, the like-to-like growth is around 15%. So that shows that the customers are back on the stores.
Okay, thanks for joining us, sir. So you were talking about the winter wear part of the market, which is obviously, your stronger portion. Can you tell us where the order book for that actually stands? And for that segment, you're not looking at any discounts, right?
Yeah, definitely not. The dispatch is going to start basically normally in September and it goes till November. So we are very positive. So we have seen that whenever there is a good monsoons, it's always followed by a good winter. And the second thing which I would like to say is that as inventory issue is sorted out, so also inventory is very low in the stores. So definitely we are hoping for a good winter going forward.
So you had given a guidance of opening 50 to 55 new stores. Considering Q1 has been a bit soft, would you rethink your guidance of opening new stores? How many will you open this year?
We will easily surpass the guidance which we have given in the beginning of the year. We are hopeful of not only achieving it, but surpassing it also.
So how many stores will you open in FY24?
FY24, we have given a guidance of 50-55, and first quarter already we opened 11 stores. So we are on track to open 50-55 stores in this financial year.
55. And would there be a revision to your capex guidance of 100 crore?
No, there is no revision in any guidance. I think everything is fine with this company. Only the one-off quarter, which is actually, I think, denting the sentiments of the investors. But I would like to again reiterate that this is a one-off event, which is will be coming back very strongly in second and third quarter.
How are the raw material costs, sir?
So that is going to benefit us because the raw material prices are, lowest in last 2-3 years. So that is going to benefit us in coming quarters.
Okay, just a question on your ad spends as well. I think right now it's at around 4% of your sales. Do you expect it to stay at those similar kinds of levels? And also what's happening on the online front? Are you having to spend more for the, for pushing the online part as well?
No. We are pushing a lot more as compared to last year in digital front. We are spending a lot of money on the digital front to push our e-commerce sales also, and that would like to maintain at 6 to 7%. And the ad spend, which you rightly talked about, it was, we have earlier also said that the guidance is around 3 to 4% of the revenues. So we are in that guidance only.
Okay. All right. We will leave it on that note. Thank you very much for joining in, and good luck with the plans in the coming quarters. That is Monte Carlo saying that the first quarter was a one-off, and they will be not just back in the black at the EBITDA level next quarter, but they'll do better. Well, let's take a break on that note. On the other side, we get chatting on the